Welcome to today's morning report chart analysis videos with me, Richard Perry, market analyst at Hantec Markets. On Thursday, the 18th of October, what we do have today is a sort of a mixed outlook, really, across markets. What we saw yesterday was the dollar, which started to sort of regain a little bit of ground, and that's pulled euro dollar again back actually below 15 big figure. Was interesting. We saw sterling under pressure from the Brexit summit, but the driver of the dollar was tended to be these yields, which started to pick up again after the Fed minutes. Fed minutes yesterday suggested that the committee was continuing to sort of be fairly firmly behind continued rate hikes, but also the prospect of going beyond normalisation. So that's an interesting prospect there that helped to drive yields higher. Now, yields have certainly sort of seemed to turn a bit of a corner following on from the fear-driven move lower that we saw a week or so ago. We've started to see the 10-year back above 320, for example. Look at that 2-year, again, sort of back to levels that we saw around the early October highs. So that is helping to sort of drive this dollar higher. We saw that move yesterday, and that's sort of seen throughout the Forex major pairs, and you can see that through a lot of the chart moves, which I'll take you through in a bit. But what we have got is equities that are basically fairly stable today. We saw a rebound into the close on the S&P 500 last night, which was certainly helped to sustain a bit of a stability move, and that came through S&P 500 futures, which were a bit lower but have rebounded a touch, and that's again helped to stabilise European markets today. Asian markets were lower before that rebound in S&P 500 futures. In terms of gold and silver, relatively stable. It's just giving back slight gains recently on silver. Now the oil price is also interesting. It's just edging a little bit lower again, and you can see here on the crude oil that just sharp downside break yesterday. Does that now mean 67? That low there is going to be retested. That's the question. But yeah, the dollar gains that we've seen have not really continued today, which is a little bit of a disappointment, I think you could probably say, for the dollar bulls in that regard. Now, in terms of what we've got to look forward to today, well, we've got retail sales for the UK, which is the main sort of data point that we've got today, and that's comes out in a bit, and expected to actually just be down slightly on the month, ex-fuel basis down slightly by 0.4%, but that's it for September, given the fact that all July and August were really strong months for UK retail sales. World Cup related certainly for July, but August continued with good weather, and that's that minor little sort of drop on the month doesn't really translate through the year-on-year data, which is still pretty decent at 3.7% there. And then into the afternoon, we've got the Philly Fed business, which is expected to dip slightly to 20, and the weekly jobs claims, at 130. That is a little bit of a mistake there. The chart of the day I've got is the Kiwi dollar. Now, what we have got in the Kiwi dollar, if I zoom back out, is this downtrend channel that we've been in for coming up near 5 months. And every time we see the market failing within the channel, it seems to come where momentum indicators give sell signals, and it comes at resistance levels. Now, obviously, we're sort of back towards the highs of the rate of that trend channel now. You've also got the resistance to the falling 55-day moving average. Yesterday's bear candle sort of puts the market on alert, I would say, for a renewed correction. The only thing I would say here is perhaps you could argue a bit of upside potential maybe on the RSI, but RSI has sort of rolled over around that 50 level. MACD line is not really doing a great deal, but the hourly chart does show that this sort of recovery move has lost a little bit of traction, fallen over. Momentum went below 30 on the hourly RSI, and that's the first time that's seen since the recovery. So again, that would sort of give you a hint that perhaps there's a bit of a change of wind going on there. So if the market now starts to sort of move back lower, it's has rebounded a little bit from 65.30, which is obviously initial support, today's low. But again, if it dropped below that reaction low at 64.90, which you can see here on the hourly chart is a higher low, then that would certainly reopen the lows again and continue this trend channel low, which is ultimately likely to continue, really. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.